Yet another industry has been rocked by this global issue, the hotel industry. And this is pretty much because traveling or even leaving your house has pretty much stopped. There's none of that happening right now. And because of that, you're not going to get any visitors, you're not visiting anywhere. And the bottom line is that hotel stocks suffer. Both business and personal travel has dropped, I believe, over 80% recently. And really the bottom line is that people do not want to leave their house because they don't want to risk getting sick. So let's spend some time today looking at these hotel stocks because a lot of them have been beaten down pretty badly here. And we could potentially find some good opportunity in these stocks here for the long term. So I'll be discussing them, I'll be comparing them, and I'll also be sharing with you at the end of this video what my position is with this industry. As always, drop a like down below. Let's try to get 500 likes on this video. It really helps support the channel, guys, and I truly appreciate each and every like that I get on here. So we already know that travel has been hit pretty hard during this crisis, as many airplane companies both in the US and around the world are struggling, and some are even facing possible bankruptcy. We also know that cruise line stocks are hurt, we also know that casino stocks are hurt, and of course we know that hotel stocks are hurt. Here we can see the big four names: Hilton, Marriott, Hyatt, and Intercontinental, and between these companies they own most of the sub-brands that you may be familiar with. Nonetheless, all of them have nosedived in the last month, but even in the last year, their performance has been poor. The worst of the bunch is Marriott, down 44%, and the best of the bunch is Hilton, down only around 18% or so. This is not too shabby considering everything that's happened in the market in the last year. Now, Hilton was the best performer by far before the market crashed as well, so it's understandable that it held up best between these four companies. But now let's spend some time taking a look at their fundamentals here to figure out if their performance reflects their overall fundamentals. Looking here, Marriott is the largest of the bunch with a market cap of $25.5 billion, and Hyatt is the smallest at around $5 billion. However, both Hilton and Marriott have about the same amount of employees here, which naturally means they'll be paying quite a bit more than these other companies during these uncertain times. And the problem is that their hotels are earning little to no revenue currently. So the expenses are pretty much going to have to be covered from their cash balance, which we'll talk about shortly. Now, on another note, this also concerns me as they employ quite a few people, and if they need to start laying off individuals, many will be affected. Now, personally, I was pleasantly surprised to see how lean Intercontinental was with only 14,000 employees, which is significantly less than the other big names. But we'll have to wait and see until later on in this video if their balance sheet is also the best out of the bunch. Now, from a valuation perspective, let's see how they sit based on last year's earnings. Looking at their trailing PE, Marriott is by far the most attractive, but Hilton isn't too bad either. It comes in under the previous market average of around 24. Hyatt was out of whack here, and Intercontinental didn't have a PE, meaning they were not profitable last year. Now, on a forward basis, it's really hard to trust these numbers, as we know they're going to be horrible for 2020. But if this was a regular year, Intercontinental and Marriott would come in as the more attractive investments. Hilton would be a decent level still, and Hyatt would still be out of whack. Revenue growth last year for these businesses were mediocre in my opinion, and this is in a thriving economy, which is concerning on a high level. Intercontinental had the best growth last year, climbing over 9%, whereas the others did see growth too, but it was around 2 to 3%. Hilton was expected to grow the most in 2020, and Marriott was expected to have a flat year, but it's safe to say that all of these businesses are honestly going to see major declines in year-over-year revenue for 2020. Profitability is an important metric for any business as well, and I like to invest in companies that have high profit margins. Both Hilton and Marriott once again topped the list here, Marriott with an impressive 75% gross profit margin, and Hilton not far behind with 66%. But when it comes to their net income margin, Hyatt takes the cake here, but I will say that 23% margins here for Marriott and Hilton is still very good. Now, I like looking at the income statements here because it gives me a very quick high-level view on how the company operates in terms of their revenue and profits. Marriott is by far the largest here, pulling in over $5 billion in revenue yearly, and this also translates to them having the best net income of around $1.27 billion. These are good figures, and I like what I see here when it comes to this. So as of right now, I would say that Marriott seems like the strongest company out of the bunch. But there's one thing we haven't looked at yet, and that's their cash positions. And this will help us understand if they can weather through this storm. Hyatt and Hilton have the best cash reserves right now. Hyatt with nearly $1 billion in cash, and Hilton with around $500 million in cash. Marriott and Intercontinental are the worst of the bunch with only around 200 million in cash, which is not very comforting. Marriott also has the largest debt load of around $12 billion. Hilton is next in line with around $9 billion, but neither have short-term debt due. Only Intercontinental has around $87 million due soon, which would bring it close to around only $100 million in cash. But remember at the beginning of this video, we saw how many employees each of these companies had. And that's kind of where my concern lies a bit. So Marriott and Hilton each have around 170,000 employees. So their costs are going to be much higher during these times. And when looking at the cash, Hilton has double the amount of cash than Marriott. So they are in a much better position to weather through this storm. Marriott may be put in a tough position here soon and may have to realistically lay off a ton of their workforce to preserve their cash. In fact, digging into the news here, we can see Marriott has already started laying off thousands of employees worldwide, and this could become permanent unless things improve in the near future. Other hotel chains have started joining suit as well, so things can get very bad very fast, which is a big risk right now as an employee here and as an investor as well. Free cash flow for these businesses are decent in regular years, and to calculate that, you just take the net operating cash flow and subtract the capital expenditures, and you get a rough idea of what free cash flow was. Based on last year's figures, Hilton and Marriott both had over $1 billion in free cash flow, Intercontinental around $600 million, and Hyatt was cash neutral here after their expenses. So in a strong economy, Marriott and Hilton get my vote. Now, a lot of investors may be holding these stocks for the dividends as well, and similar to other industries getting hit hard right now, I think dividend cuts are coming up here. It's simply not sustainable to keep paying dividends when your income is down close to $0, but nonetheless, as of today, here's how things shake up. Marriott is the longest dividend grower with 9 years straight of dividend growth and has the best yield at nearly 2.5%. But again, I personally would not invest in these businesses right now just for their dividends. If you look at their payout ratios, for the most part, they are decent in a regular economy and regular times. But Hyatt was struggling last year as well, and they may actually be the first one here to cut their dividend if they haven't already. So I mean, just like with a lot of other industries, the hotel industry is also probably bracing themselves for the worst year in their history. Most likely or not, we're going to see figures that are worse than 2008. Because in 2008, you still had people traveling, you still had some parts of the world doing fine, and people still had the freedom and choice to travel if they wanted to. And when they travel, they stay in hotels. So that was a big factor that helped revenue still. Also, in general, from 2008 to now, you have Airbnb, which is another big competitor to hotels in general all over the world. But anyways, as it stands right now, there's no traveling happening, but if we're lucky, around summertime, we may see travel start to pick up again. Maybe business travel starts up first, and then personal travel follows after that. And if that happens, then we will see some of these companies start coming back to life, bringing in more revenue, hiring their employees back, and everything should start getting back to normal over time. All right, so now it's time to disclose my position in this sector. And with many other sectors that are hurting right now, I currently do not hold a position in any of the stocks discussed today. However, I am spending a bit more time here looking more into Hilton and Marriott to see if these companies would fit well in my portfolio and if they have a good risk-to-reward ratio for a long-term hold. If I were to pick a hotel stock, it'd probably be between either Marriott or Hilton, and I'd also look at some casino stocks as well, maybe Las Vegas Sands or maybe even MGM, and between the four of them, kind of pick one to really ride out through the storm. I'm not fully convinced that I want to do this yet. I'm going to still have to do more research to see if this is a good investment for me. That's kind of how I would play it. I would not go around and put my money into all of these industries right now, like, the airplanes, hotels, casinos, all the hurting industries. Not really something that I would personally do because the risk would be much too high for that. But I am trying to pick and choose a few companies in here that I think has some good value and could provide good returns over the long term. And quite honestly, guys, if Airbnb was a public company right now, their shares would be like tanking like crazy. But at the same time, I think they actually would provide the best value for a long-term investor. I believe that Airbnb is kind of the future of this industry, where people have the flexibility to either go to like a hotel type experience or someone's house if they choose to do so. And that's kind of where Airbnb shines. And I also noticed that Airbnb is just so popular all over the world. So if it was a public company right now trading on the stock market, that may actually have been a stock that I would have been buying heavily the last few weeks. Honestly, this would have been like a once in a lifetime opportunity to pick up Airbnb at such depressed valuations when pretty much there's no traveling going on. But it is what it is. It's not public yet, so we have to work with either these casino stocks or these cruise line stocks or these hotel stocks. Guys, let me know in the comment section down below if you hold any hotel stocks in your portfolio, and if not, why not? And if so, which ones do you hold and why do you hold them? I'd love to hear your thoughts in the comment section down below. But either way, guys, thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one. Peace.